Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Thursday. It's October 19th. It's only 10 days before my birthday. And I got another t-shirt. Thank you, Grandpa Gary. Straight out of Telegram. You should all subscribe to my Telegram channel if you haven't done it yet, folks. Go to rogerscott.com/Telegram or just go to the YouTube channel, which is go to YouTube, go to Roger-Scott in the search box, and under the video, you will see a link to Telegram. Also, my VIP room is going to be open at 11 a.m. today. Make sure you're there, and I'll be swing trading and day trading all day long on the Telegram channel. Just like this says right here, Telegram, straight out of Telegram. So, before we get into today's session, I wanted to give you a little lesson, and I hope you guys, it would be very difficult to write this out. It's much easier to explain this to you. This is a tactic that I used yesterday, and I use this all the time. When I want to hedge myself when holding overnight positions. So let me show you exactly what I did, why I did it, how I did it, and a few lessons that you could take away from here, okay? So as you know, Tesla, right, was coming out with earnings. Now, all day yesterday, Tesla was down. And this said to me that things were going to be negative. Well, I was right. We broke through the 50, the 100-day moving average. We opened down here. It happened to be a right call. But let me show you something interesting. Look at Netflix. Netflix was doing exactly the same thing. Exactly the same thing. Look, crossing below the moving averages, actually even weaker than Tesla, all the way down through the moving averages on high volume. And look at the session yesterday. Session over the this is the nighttime session, but this is yesterday. Let me just take extent. There we go. Sorry about that. Look at the trading day yesterday. Complete down day, complete short, and then again, look at the other one right here. Look at Tesla yesterday. I wanted to take the overnight data away. Look, down and down. Now, they both looked super bearish. So the first thing is, well, you can't tell how earnings are going to impact the stock. So both stocks looked super bearish. Yesterday, all day long, funds were selling. Both Tesla and Netflix. Look at this. All day long. Everything was bearish. Matter of fact, as I mentioned, Netflix was probably more bearish than Tesla. And Netflix is opening up 47 points up, and Tesla is opening down 18 points. So is it possible to tell ahead of time if stock is going to go up or down during earnings? I can't do it, which is why I didn't trade these stocks. But I want to show you a little trick. This is where things get fun. What kind of a stock is Tesla? It's a consumer discretionary stock. Follow along. What kind of stock is Netflix? It's I thought it was a consumer discretionary stock too. It appears to be a consumer discretionary stock. As a matter of fact, yesterday when I looked here, I thought it was a consumer discretionary stock. I mean, Netflix is like the king of consumer discretionary stocks, right? It's not a need. It's a luxury. I mean, it's a luxury for folks who don't need things. I mean, you can watch TV on channel NBC, CBS, but if you want Netflix, you got to pay for it. It's a discretionary company. Didn't want to touch these companies because I didn't want to get stuck in being down 48 points overnight on a short. And in this case, I would have been up 8. So I would have been down about 20 points, 20 something points. Didn't want to do that. So look at what I did. Etsy. Etsy is a consumer discretionary company. Low is a consumer discretionary company. I went long Etsy and I kept Etsy overnight as a long trade. It's down a little bit. And then I have a short on Lowe's, which is a short trade. Now look at how Lowe's on a daily, look how it looks. And look how Tesla, I keep saying Tesla, Etsy looks on an intraday basis. Coming up on a daily basis, sorry. Looks like it's going higher. So the point is, sometimes when you're holding a stock, here's the moral of the story. I knew the 2 discretionary stocks were coming out. I didn't want to hold those stocks. I had no idea how they were going to do. But I had a long position in Etsy that I wanted to hold overnight in case consumer discretionary stocks rallied and Etsy would go up. At the same time, I wanted to hedge myself because I didn't know for sure that was going to happen. And if consumer stocks were going to go down, then stocks like Lowe's would be helping me make money. So what I did was, knowing that Tesla and Netflix are coming out with earnings, I hedged myself because I had a long that I wanted to hold, and I took a short and I held that short overnight. I could have taken a 50-cent profit before the end of the day yesterday. Look at this thing. Just whopped down right before. We were short right here, or sorry, about right there. Yeah, so could have taken a nice profit on it, but I didn't. I kept it short. So the moral of the story is, if you have two stocks coming out with earnings overnight and you're holding a related stocks, like we were holding Etsy long, and you're afraid that the market is going to have a big move, what you want to do is hedge it with a similar stock in the same category. Find the strongest and weakest stock in the same consumer discretionary. So now you understand why I didn't let go of Lowe's and why I still have Etsy. I wanted to wait till the earnings on these stocks were out, but I didn't want to trade Netflix, and I didn't want to trade Tesla. This is what professional traders do when they want to have exposure on a stock and take advantage of earnings, but they are not sure which way things are going to go, and they know there's going to be a lot of volatility. So what I did was, consumer discretionary stocks are coming out with earnings. I had a consumer discretionary stock that I'm long, so I wanted to hedge myself, and then I got into Lowe's as well, and I kept it overnight. I wanted to do this video last night, but I was really, really exhausted. And I wanted you guys to understand why we're still long Etsy and why we're still short Lowe's, and why you can't trade stocks before earnings. Because even though both stocks, Netflix and Tesla, looked hyper bearish yesterday, one is opening up 48 points and the other one's opening up 18 points. So I hope I taught you a good lesson here on how professionals trade related stocks, why I didn't trade Tesla, why I didn't trade Netflix, and why I kept Etsy and Lowe's short. So I hope you do review this video. Now let's get into today's session. So it would try to explain that in writing, right? All right, Nasdaq is up about 18 points. Dow's down about 56 points. This is very random, and that's good because we want the stocks to do the heavy lifting, not the market today. We want to see stocks show their true colors. You have Philadelphia manufacturing activity, and you have existing home sales. I would be very, very careful with existing home sales because they're breaking through the 200-day moving average on very high volume. This could be a very good day trading candidate today, just FYI. We also have jobless claims, which is not going to be an important number. They've been like near 200,000. They've been going lower instead of higher. Look at this, 206. It's beautiful. And we have manufacturing, which means we need to keep our eyes on basic materials, right? Which not doing all that great, and industrial stocks as well. And industrial stocks are actually not doing either well. Both ETFs are triggering off the 200, bouncing down the 200-day moving average. Not really happy about any of that. Let me talk about the fundamentals, and then I'll talk about technicals. Okay, but again, what I really wanted to go through today was the reason why we don't trade earnings, because they're unforeseeable, and how you can use earnings in related stocks to hedge yourself and to give yourself overnight exposure. Okay, so that's the moral of the story here. Netflix overshadowed disappointing Tesla results while investors looked ahead to a speech by Powell. Don't get me started. I got my umbrella ready. Netflix is up about 13%, completely unforeseeable. No trading action yesterday would have foreseen that, as I showed you. Tesla down 5%, not really offsetting the Netflix, which is a good thing. I think we need to go a little higher. I think we're going to get a little bounce in tech today. September housing starts didn't do well, but permits did better than expected. I think this is the second time we're seeing that. Here's where we get to the green stuff, the Fed. Christopher Waller stated Wednesday that policymakers can wait and collect more data before deciding whether the economy necessitates further monetary restraint, indicating his preference for keeping rates unchanged. They're not going anywhere. I believe we can wait, watch, and see how the economy evolves before making definite moves on the path of policy rates. I agree with him. Williams said that interest rates would need to remain at restrictive levels for some time. Basically, what they're saying is we can keep things where they're at right now. Now, real quick, I forgot to mention this. Somebody asked me this, and I forgot to say. The bond, notice that long bond is getting lower. It's at a swing low, which means interest rates are at historically high levels, multi-year high. This is very bad for tech. But my point here is the bond market is doing all the work for the Fed. The bond market is increasing the long rate, which is what the Fed would do if they would be raising rates by a quarter of a basis point. So one of the reasons why the Fed is doing nothing is because the bond market's doing all the work for them. Just wanted to bring that to your attention. And somebody asked me that in the VIP room yesterday, and I forgot to answer them. There's almost a 40% chance that the Fed is going to raise rates in December. I believe that number should be higher, and I predicted that this number will go to 50, maybe 60% before it's all said and done. Let's see how that goes. Powell is speaking today. Put on your helmet. We've got earnings from Philip Morris, UNP, Blackstone. Blackstone's a big, very influential company, and utilities, AT&T. It'll be very interesting to see how that goes. Philadelphia Manufacturing Index is coming out. All of this data is coming out today at 8:30. Good. So you will have this in about half an hour before the market opens. You'll be able to make a game plan based on that. Initial jobless claims are a nothing burger. Europe is keying off of U.S. 1 week low. Yield, bond yield. I just showed you bond yield. Interest rates, long-term rates are at the highest level they've been in, I think, 7 or 8 years. I'll have to look it up, but a long time, a long time. China closed lower, not giving us any tailwind. Investor sentiment continued to be subdued despite indications of stabilization in certain sectors. Yeah, I don't buy it for a minute. They're having a hardcore real estate crunch, which is a huge problem. Japan closed lower as continues worries over unrest in the Middle East, which is keeping energies up, and Fed's rate trajectory dampened risk appetite. Heavyweight chip-related stocks underperformed, and we have a lot of earnings today to report. I mean, look at this. We're neck deep in earnings. As far as sectors, energy, and then consumer staples. But if you look at consumer staples, they're not really convincing me. Energy is convincing me. Is anything else really convincing me? Is anything else looking convincing right now? No. I hate to say it, but energies. If you're an energy trader, I told you to buy energies when we were right here, and I'm still telling you to buy energies. I like energies, and I think I'm going to repeat this for the 50th time. While this Middle East fiasco, this drama, which nobody needs, is going to be around, energies are going to be elevated. I would go to 11.3. It buys you 15 days. 15 days, we should see another upswing. Now, all bets are off if this war is resolved. Okay, but while there's talk, things going on, while it's in hyperforce, I think energies will be elevated. So, and again, these are swing trades. I would be going to 91 strike price, maybe even 90.50 strike price. You'll have plenty of liquidity. They're going to be very, very liquid once the market opens. Now, let's talk about the broad market. I'm really glad I got a chance to talk about Tesla, Netflix, and consumer discretionary. I gave you that lesson. I wanted to do it last night, but I was just exhausted. S&P right here is near a very, very important level. And if we break down on this level right here, we're going to hit the 200-day moving average because there's just nothing here stopping us. So be very careful. Now, I personally think we're up due for a little upside move. But again, things can go either way, and Europe isn't helping us. China's not giving us tailwind. I think this morning is going to be impacted by earnings on stocks that are coming out and by the Fed manufacturing index and existing home sales later on. Not focused on existing home sales yet, just want to get through the first half hour of the day. Not going to be putting on any trades the first half hour, 45 minutes of the day. We'll be allowing the market to show its hand. Speaking of market, let's look at QQQ, which so far has stood better than the SPY. We are now trading below the 8-day, 50-day, and the 100-day moving average to the downside. And again, I'm expecting us to continue to be in this range, but it'll be interesting to see what happens today. It's hard to predict market action pre-earnings, especially when you have one stock up 40 points, one stock down. But I can tell you this, I'm not expecting a huge level of volatility just yet, except if Tesla or Netflix really starts making counter moves, which we will be watching very, very carefully. So again, why are we still long Etsy and short Lowe's? Because they're both consumer discretionary stocks, and we needed a hedge to hold overnight because Tesla and Netflix were coming out with earnings, and I didn't want to go into today. I wanted to go today with some positions to both sides of the market. So very important lesson for you today. Remember, VIP room is at 11 a.m. today. We've been calling out some juicy winners on actually really good trades lately. Please come there at 11 a.m. today. Now, my new data mining software has been stacking up wins on stealth stocks faster than a pancake at IHOP. I could use a pancake at IHOP. And it's just helped me pinpoint my next big seasonal play. Granted, no one can promise future returns or against losses. We don't have a time machine yet. But so far, we've got a 77% win rate on 50 trades, roughly 50 trades. So if you want access to this new software to help you spot these surges, click the link below and you'll be on your way. And by the way, we just closed out a trade yesterday. I think Win, WYNN, Win, we won on Win. I think it was about 80%, something like that. It was a good trade. Folks, I'll see you guys later. And remember, Telegram channel, rogerscott.com/Telegram. You'd be nuts not to subscribe to that channel. And again, thank you, Grandpa Gary, for a wonderful t-shirt, and I'll see you guys later. Tomorrow, I'm going to be out. I'm going to be taking my daughter to Disney Park. I'll be on Telegram, but I won't be trading. But I'll be updating you every step of the way, and I'll get you a morning video too. Bye, guys. I'm very dedicated to you. If I'm helping you make money, send me an email, roger@rogerscott.com. Bye.